My name's Commander Tom. You're on board of our spaceship, Voyager X510, on our flight through the Andromeda fog. At the moment, we have an information breakdown with our mothership.
Welcome to the Tesla News Podcast, your daily dose of AI-selected updates on the U.S. carmaker. Tesla Investor Day. Long on vision, short on specifics, Tesla's Investor Day was a much-anticipated event that left investors with mixed feelings. On the one hand, Tesla presented its third installment of its master plan, which included ambitious goals of producing 20 million electric vehicles per year by 2030 and building more car and battery cell production plants, while increasing output at already existing locations. This gave investors a long-term vision for the company, but lacked specifics on how the company would get there. On the other hand, Tesla also announced that it is giving non-Tesla EV owners access to its charging network, teased an intriguing mystery vehicle, and provided an in-depth walkthrough of the manufacturing and production capabilities of Tesla. However, there were no updates yet on the Model 3 and Model Y refreshes, no word on the Roadster, and no details on next-gen platform with timeline and possible launches. Wall Street analysts largely agreed that the plan gave a long-term vision for the company, but lacked specifics on how the company would get there. Tesla likely needs a cheaper vehicle for the future, and the Investor Day provided no details of pricing or timing for its low-cost vehicle. Tesla's improved vertical integration and cost-cutting initiatives, as well as its manufacturing capabilities and massive scale, were discussed, but the Investor Day was long on vision, short on specifics. Tesla Bear expressed concern for Tesla after the Investor Day did not reveal a new low-cost Tesla vehicle, update timing for the Cybertruck release or discussion of robotaxi ambitions. Tesla shares are trading down 6.47% to $189.66 on Thursday, and analyst ratings and price targets largely remain unchanged after the event. Tesla's Investor Day provided helpful details on how Tesla has reached its current point but was short on specific near-term catalysts. Tesla is leading the race to the bottom when it comes to costs for electric vehicle companies, and it is clear that they need to provide more details on their plans for the future in order to keep investors interested. Tesla's roller coaster ride. It's been a roller coaster ride for Elon Musk over the past few days. After reclaiming the title of world's richest man on Monday, Musk has once again lost the crown to French luxury goods mogul Bernard Arnault, the founder and chairman of Louis Vuitton maker LVMH. This news comes as Tesla shares have been on a downward trend, dropping 1.7% at the end of Wednesday's session and another 6% on Thursday morning. Investors had expected to see new electric vehicles be revealed Wednesday, but instead were given a huge tease, a slide showing two disgusted future vehicles. The main focus of Investor Day was on an Earth without fossil fuels, and Tesla has become the world's most valuable car company. Tesla had promised to discuss expansion and capital expenditure plans, with various projects from batteries to self-driving technology to new factories. News broke Tuesday that Tesla will break ground in Mexico for a new assembly plant worth more than $5 billion. Tesla has car factories in the U.S. states of California and Texas, as well as in Berlin and Shanghai. It was also revealed that the Cybertruck is coming this year. Capturing the mass market is critical to Tesla's goal of increasing deliveries 15-fold, to 20 million vehicles by 2030. To achieve this goal, Tesla will have to improve its battery technology, as well as plans for a more affordable car that could draw the broadest interest. However, some investors are concerned that Musk is spending too much time on his latest major acquisition, Twitter. With Tesla's ambitious goals and Musk's attention divided, it remains to be seen if the company can achieve its goals and maintain its position as the world's most valuable car company. Tesla's ambitious expansion plans. Tesla Inc. has been making headlines recently with their ambitious plans to expand their electric vehicle production. The company has broken ground on a proposed lithium refinery near Corpus Christi in South Texas, with plans to start commissioning refined lithium from the facility by year's end. Tesla CEO Elon Musk has stated that the focus should be on refining capacity, and the company has already begun construction on a cathode facility at its Texas factory to be completed within 10 months. Tesla has also announced plans to open a plant in northern Mexico, and has set a goal to sell 20 million vehicles by 2030. The company has also moved its headquarters near the Texas capital from Palo Alto, California, in 2021 and plans to spend $775 million to expand the Gigafactory near Austin. Tesla is also set to start production of their long-delayed Cybertruck by the end of the summer, and will be making EV cars including Model Y SUVs using new, larger 4,680 lithium-ion cells. The company is also seeking about $16.2 million in tax breaks over 10 years from the Robstown Independent School District to build a facility. Despite the economic uncertainty caused by higher interest rates, Tesla has managed to cut vehicle costs, some by nearly 20%, and their shares have rebounded about 65% over the past 2 months. Despite this, Elon Musk sold nearly $23 billion in stock last year, and Tesla shares closed at $202.77 on Wednesday, a 1.4% drop from Tuesday. Tesla's plans for expansion are ambitious, and it is clear that the company is looking to make a major impact on the electric vehicle market. However, it is also important to consider the potential economic and environmental impacts of their plans. The company's reliance on tax breaks and the potential for environmental damage from the lithium refinery should be taken into account when evaluating Tesla's plans. Additionally, the potential for Musk to continue to sell large amounts of stock should be monitored to ensure that the company is not taking advantage of investors. Overall, Tesla's plans for expansion are ambitious and could have a major impact on the electric vehicle market. However, it is important to consider the potential economic and environmental impacts of their plans, as well as the potential for Musk to continue to sell large amounts of stock. With careful consideration of these factors, Tesla's plans could be successful in helping to revolutionize the electric vehicle market. This is all for today. Tune in tomorrow for more updates and don't forget to like and subscribe. Although hopefully informative.